little bit over the top.
What's going on, guys? Welcome back to the channel.
Anyway,
Listening to little Greg Mannarino. I'm gonna link to this channel. If you're into markets, if you're into investing, any of that type of stuff, Greg has some incredible insight. I want you to hear what he's got right here.
These assets, and they're kind of fluctuating down here. Other ones are high. You've got to be spread out. It cushions your portfolio, and you just sit there and you look for opportunity, people. And again, it's not just in the stock market. You've got to be looking at, again, precious metals #1 in my view to bet against the debt.
I'm gonna explain why that is.
I can't say this enough.
And I
also believe cryptocurrencies are a way to take advantage of that, because I sincerely believe, and I won't ever waver from this. Nothing will change my mind. The inevitable implosion in the debt market is going to happen. And when that implodes, the pressure that is going to be put on the stock market is going to be epic. Absolutely epic.
All right, so I totally agree with Greg on that point. It took me a while to understand where Greg was coming from with this, because I didn't have a good understanding of how the debt market influences the equity markets. So equity markets being the stock markets, think like S&P, Dow, Tesla, all that. And then debt markets are your bonds, like your 10-year yield and, debt, corporate debt, things like that. And he would say things like, there's going to be a crash, there's going to be a meltdown in the equity markets and the debt markets. Like, no doubt about it. Like, we're going to go to a new, it's not going to be a new, we're going to go to a new world disorder for a minute. And then people and countries and elites are going to battle for power, position, and influence. And new things are going to come out of that. I mean, ultimately, new things are going to come out of that. But I didn't understand the process for how this played out. So in 2020, I see a deflationary thing occur in February, March. I didn't understand at the time how to play that. So I just got myself personally into a good position. Like, I stored up food with the scandemic coming down the pike, and I was earlier saying that something was going to happen. If you go back and watch my videos of September of 19, where the repo market dried up. This is like the overnight market where large companies like Walmart loan money to other companies, and they essentially trade their treasury bills, or what's like, cash on their balance sheet. Treasury bills are considered cash, back and forth, and they make like a yield on it. And when they need cash, they just go, like, you can't go borrow like $5 billion from your local bank or like anyone like that. You've got to typically go to the overnight market. So I didn't have a good understanding of where Mannarino was coming from with his signals. Okay, I get it. Like, at some point in time, it does seem like things are a little stretched out, like things are a little crazy, like nothing goes up in a straight line, nothing goes up this hard, this fast, like without wrecking. And I'm talking like housing, new cars, new tractors, used tractors, like name your favorite thing, oil, any of this stuff, like Bitcoin, like everything is just in this. And what's fueling this thing? And Mannarino helped me understand it's a debt super bubble. And he's 100% right on this. And Mises, one of my favorite Austrian economists, writes a lot on this. And he writes about the crack-up boom. And I said on May 10th, I had posted a video about the crack-up boom. And I said, I think the crack-up boom's starting now. Now, every other YouTuber is like, oh, this is a crash. This is the big one. This is 1929. And I don't disagree that 1929 is coming. Like, October of 1929 is coming. 1933 is a lot more interesting. Like the part where the government steals all the gold and like then they revalue it and everyone loses an additional 40% of their wealth and purchasing power. Like that's more interesting. But like, 1929 is coming for sure. And then governments are going to do what they always do for sure. But is it happening today? Is it happening tomorrow? Is it happening this month? Is it happening this summer? I don't think so. Like, I just don't think so. And the reason for that is Mannarino's point on the debt market. When you see the 10-year yield, and that's like the ultimate treasury bond, right? Like, you're buying something and you want to be safe. And let's give an example. Let's say I sell a property and I've got $1 million in cash. And you guys know, like, your typical banking institution is going to be FDIC insured for $250,000. Sometimes 500,000, but 250,000 is pretty much the normal on a regular checking account. And let's say I want to stay in cash. Well, like, I don't want to put that $1 million in with one bank, or certainly not one bank account. I'd want to put it in 2 or 3 or 4 different bank accounts so that they're all FDA insured. But if that bank failed, it might be a few months or years before the FDA insurance actually pays out. So I might want to have it with 2 different banks or 3 different banks to just spread out my risk. Well, let's just say I don't want the hassle, and I want like to earn a little bit of interest on it. I just buy a 10-year treasury bond. That's what I do, is I just buy $1 million in 10-year treasury bonds. And then anytime I want to sell it, I mean, it's liquid cash. I mean, it's immediate liquid cash. I mean, the Federal Reserve will buy it. Like, it's immediate liquid cash. But I don't have banking risk. I have government risk, but I don't have banking risk. So when the yield on the 10-year treasury falls, it's because cash is moving into the debt market. And what it means is it's a supply and demand equation. A little grind it till you find it action. Not throwing in the clutch. So when cash moves into the 10-year yields, well, you got to get, like, there's more buyers than there are sellers. And so what's happening is people are going, I'm willing to take less of a yield. I want to just get me in, man. Get me in the door. When there are more sellers than buyers, they got to cheapen the price of the bond. So you buy a bond for $1 million, it's not going to stay at $1 million. It's going to move between $998 and $1,004,000. It's going to move in that range, but the yield that the bond is paying, the coupon on the bond, what that bond gives you every year in exchange for owning it, and the 10-year yield is, it's money coming out of bonds, a lot of money coming out of the best bond. And in that case, where is it going? And so we would have to speculate, where is it going? Well, it's probably going to the equity markets because of the 60-40 portfolio that I was taught in finance school. Since like Ray Dalio really made it popular, which is the 60-40 portfolio, which is 60% equities, 40% in debt or bonds. And if one of them's doing well, the other one's probably not doing as well. And if one of them's doing really, really bad, then the other one's doing really good most of the time. And so when cash is moving out of bonds, it's moving in equity. And when cash is moving out of equity and the stock market is falling, and the 10-year yields, well, the 10-year yield is changing, right? Mannarino is getting at is he's like, look, most portfolios, the norm is a 60-40, spread, where 60% of the portfolio is in equities, 40% of it is in debt or bonds. And so when cash moves out of bonds, it's typically moving into equities. When cash moves out of equities, it's typically moving out of bond or moving into bonds. And that's his point. So he's like, look, we're watching this equity market because to get 1929, you have to have wealth destruction. Now, a lot of the real tangible assets, they're going to still be here. Like the houses are going to be here, the vehicles are going to be here. There might not be gas to run them, but like all these things are going to be here. So like most of the real wealth in the world is going to be here. It's just going to change hands. Some of it will be destroyed. For example, if Tesla is selling for $1 trillion, and then all of a sudden Tesla stock goes down to $100 a share instead of $1,200 a share. Well, now it's selling for like $100 billion, right? So that $900 billion just vanished. It just goes away. Likewise with debt, where you can have this pump, but then if the debt is defaulted on, well, those bonds are worth nothing. So at some point in time, this thing will just like keep rising, and it'll just explode. And he's like, you'll know that the volcano is about to blow because the 10-year yield is going to spike. Like it's going to just like it's just going to go like, and like that's going to be your finale, And so what he says is like when that thing gets above like 3.5%, 4%, 5%, like it's just ready to go. But nonetheless, as of recent, the 10-year yield has been falling, which tells us that there are more sellers of bonds than there are buyers. Where's that money going? Well, it's going into the equity market, and so on a day like today, you see it go up. Like the equity market's like all closed up like 2% higher, and they've been in a decline for like 5 months now. But for sure, 1 month, like 20% decline. I mean, a lot of companies like Apple, Netflix, Tesla, like the FANGs, what they call them, or just your general equities. Just take your favorite company, like just look at like AT&T, or just talk, you know, any company, Coca-Cola. Like look at these things, and like they're not making new all-time highs, but they're still pretty damn high on like a 10-year average. Like on a 10-year, like if you look at it, you're like, okay, yeah. I mean, look at a chart of the S&P 500. Or the Dow. I mean, it's just nuts. And so if you look at the larger picture over a 10-year time frame, yeah, this thing's going down. There's no question about it. But right now, every YouTuber and his mom is calling for like this crash and this recession. And like, yeah, it feels like a recession. I run a small business, 2 small businesses. I get it. Like, it feels like a recession. You go to the pump and like $100 just doesn't fill the tank anymore, you know? Like, I get it. Last month business was real slow in my area. It was real weird. This week I can't keep up. You know, it's just like, it's kind of sporadic right now. However, that doesn't necessarily mean that us, the plebs, matter. Just because it's a recession on like the average guy doesn't matter an iota for the equity markets and for large institutional investors, particularly the banks that are sitting on $4 trillion in cash that has a velocity of essentially 0. It has not moved. It's just sitting on the balance sheet of these banks. At some point, these banks are going to go, we're losing money on inflation. We're going to have to go somewhere with it. Where are they going to go? Housing's pretty high. Equities are pretty beat, right? So housing's pretty high. Equities are pretty beat. Like, look at Tesla. Like, it's off $500 from its all-time high. Like, so Greg's point is that, dude, this money is going to find its way into the equity markets. It's gonna go crazy. I say that's the Mises crack-up boom. That's when guys are like, oh, I don't play in the stock market. That's when they're like, oh man, should have got in. They all start coming in, right? And then that 10-year yield spikes because there's just, everyone's jumping into the equity market, and then something happens, whatever it may be, some black swan event happens, right? Oh, never saw this coming, right? Like reality hits and it just evaporates. And that cash is going to be a rush to the doors. Everyone's going to be like, oh my God, I got to sell my stocks at any price. I got to get anything for it. And that value is just going to evaporate. Now, the companies are still going to have as many, you know, they're still going to own the real estate. They're still going to own the stuff they have. Like they're still going to, but like that paper value is just going to dissipate. But those sales, the equities that are being sold, they got to go somewhere. And Mannarino says, he's like, where do you think it's going? Where do you think it's going? You know, guy watching, it's going to precious metals and it's going to cryptos. Like when this thing hits the fan, and whatever this is, and whatever and whenever it hits the fan, truly hits the fan. Not like your homies on YouTube right now, they're like, it's going to be a crash. Look, all the signs are there. I understand how you see that. But the 10-year yield is falling. Money is leaving the 10-year yield. Where is it going? It's going into the equities. And so it's very likely that we'll see this spike in equities, and it'll be like this gravitational pull that'll pull all the plebs in. They'll throw in, they'll re-margin up all their stuff, and then there'll be this event where it crashes or it falls a little bit, 10%, 20%, really quickly. Not like over a month, like over a week or a day. And people get margin called. And margin called means like you're trading with some you're trading with some debt. If you've got like a typical trading account, you know what margin is. It's like, oh, I got $3,000 in my account, but then, you know, Robinhood's like, yo, you want another $3,000? You can have it for 3% interest. And you're like, yeah, let me take that. Now you got $6,000. You know, like what happens is you get 20%. A crash in a week, that margin call is going to be like, oh, your account's in deficit. If you don't pay, you know, if you don't re-up to make sure that you're not beyond a 50-50 margin, we're going to have to sell some equities here to cover your margin. Well, that causes equities to come down, which causes more selling, which causes another margin call, which causes equities to come down. So it starts to become this vicious sky. It's a doom loop. Like, it's a doom loop. And so Mannarino's like, when those sells and sales are occurring, not the people that are out on margin, that's just going to evaporate. They get screwed. But like where do you think that like those first buyers are going? Dude, they're going to precious metals, baby. They're going to cryptos, man. Like, and I do think we're in a crypto winter. I called that like 6 months ago. I said, look, like Bitcoin has peaked, like at that 63 number. And I know there's a lot of channels out here, like I remember the Ninja was calling for like $100,000 Bitcoin. And I'm like, bro, like what? Like, yo, what type of stuff you smoking, bro? Like, send me some of that. Like there's just no way. But during the crack up boom, yes, I don't disagree with $125,000 Bitcoin. I really don't. However, Bitcoin is very cyclical. Like it has cycles. It's very clear that Bitcoin works in a 4-year halving cycle. And right now we're in crypto winter, which means that there are more coins coming to the market. There's 900 coins a day coming to the Bitcoin market. And they're selling for like 30 grand a coin. So do the math. That's how much money is coming, or is being created, let's say, or needs to come in to keep the price the same. And so what's happening is there's an inflation problem with Bitcoin right now. There's more coins coming to the market than the market is throwing to it. No one's getting stimmy checks to buy Bitcoin right now. No one's getting like, no one chases Bitcoin when it's down 50%. No one, so crypto winter occurs. Well, what happens after the next halving cycle? Well, now it goes to 450 coins a day are mined into circulation. If you know Bitcoin, you know it caps out at 21 million coins. That's what makes it a very good sale, a good pitch for a monetary network that is outside of sanctions and is a peer-to-peer cash system. Really, I mean, it's a really interesting play. But could it be like the .com thing, like where Bitcoin goes to 100,000 and then drops to 10,000, a 90% drop? Yeah. Could it drop 90% from its last all-time high? Yeah. Heck yeah, dude. Like, that's the game of Bitcoin. Is an accumulation game. It's an end game. It's I'll see you at $1 million Bitcoin game. All right. It's not like, oh well, it went from 60 down to 40. I'm out. No. Bitcoin's going nowhere. But I don't want to digress on that. What I'm saying is that all these guys calling for this crash, I disagree with, and Mannarino disagrees with. I could be completely wrong. We're gonna know. Like I said on May 10th, like we're gonna know in like 6 weeks. Like if I'm right or wrong. I said July 4th. So by the time we get to July 5th week, right then, like I don't know what that's a holiday. I know it's a holiday, but I don't know what day of the week that the 4th falls on at this point. But we're gonna know right around that first week of July whether we're in that downtrend right now. We're in full recession mode. Even though it feels like it down here, like on the ground, it feels like a recession. I get it, but the plebs don't matter in equity markets. They don't, and people have a hard time understanding that. They think that Wall Street is a good indicator of Main Street. That's not the case. Wall Street doesn't give a shit, and so I'm with Mannarino on this. Like, I think there's been a lot of pullback. I think there's $4 trillion on bank balance sheets that's in their public records. So, like, I own JP Morgan, and it's got a PE ratio of 1 to 9, paying like a 4 or 5% dividend, and it's beat up a lot. I bought it after it dropped a lot, so I was like, yeah, let me buy some of that. Not that I'm a fan of JP Morgan, it's like the worst bank in the world, but like, I buy it so that I can watch it, so that when it starts to move, I know when the game starts. Because it's gonna spike and it's gonna dump. I have no doubts about that. Also, JP Morgan, best way I can get equity exposure to Russian stocks, and I want Russian equities. And JP Morgan, though Americans and can't own, or can't buy or trade or any of that stuff, the rules are different for JP Morgan. So I just buy JP Morgan at a PE ratio of 9 because why not? It's the only way as a pleb I can get in there, right? So I want to put Mannarino on your radar. I'm linking to his channel. I take a look at him. I want to put this crack up boom on your radar because if this thing occurs, there's gonna be money being made on the way up, and there's gonna be money to be made on the way down. And what we just saw in this little, this last correction, I think it's a correction. A lot of people think that this is the start of the crash, and hey man, we're gonna know in a year. Like, we all got videos out, and we're all gonna be able to tell. But like, look. The debt market matters, and it totally matters. And the Fed can't raise interest rates, and so the best way to like get inflation to chill out right now is to literally like have a little bit of a pullback. Like the Fed needs a stock market pullback. They helped create this. They raised interest rates a little bit. They stopped quantitative easing, which basically means like counterfeiting. Like they know like what they're doing to an extent. They're always reactionary, They're never forward thinking, and they will screw this up. And at that point that they screw this up, that cash is going to move into precious metals. And right now, people are disgusted with precious metals. Oh, this hasn't moved. And it's like, I like that. That's why I sell precious metals. It's end game stuff. If I can help you buy precious metals, I would love to. Actual real financial system. And it is money metals, real things, not currency. But in the game of currency, in the game of equities, the game of debt, we have to look at the 10-year yield. And as the 10-year yield falls, I think that you're going to see it in the equities. In addition to that, all the dollars that were created around the world in the last 30 years are going to come home to roost. And when they come home to roost, they're going to be buying things like Apple stock, Tesla stock, things like that. If you're sitting in West Africa and you own a large refinery or something like that, and you're a well-to-do guy, you're not keeping your cash in that country. You're getting paid in dollars because it's global reserve currency, and you're looking to buy dollar-denominated assets. You're going to dump it in the U.S. stock market, and you've been doing that for a long time. And so you don't really even care what the inflation rate is of the dollar because you only care what it is relative to your own country's currency. So you don't care that the dollar's losing 8% a year domestically, they say, because relative to your country, it's doing a lot better than your local currency is. So that's what's occurring here. And that's what you've got to look at, and you got to look at the larger picture. So I think what's going to happen here is like you're going to see a run up in equities, and the crash will be epic. It will be biblical. But a 5 or 10% weighting right now in precious metals, why everyone hates them and they're disgusted with them, is like their lifeboat is sitting out there. And then when things get good, and hopefully you don't get too greedy, you gotta take some of those chips off the table and make a 10, 20, 30, 40% allocation towards precious metals. I think personally I'm like rounding 20% or so. I'm working my way to 50. But I know where I can grow cash right now, and I can grow it in equities. And if I'm wrong and the equities just vanish, whatever, precious metals will more than make up for the loss. But if equities continue to grow, and I'm able to sell more, not at the top, but just sell them at a higher level than they are now, and continue to buy metals and increase. And so by the time the rush to metals comes in, well, I've got them. And so this is going to spike. The precious metals is going to spike. The equities is going to dump, and I'm going to sell my metals and buy the equities. And hopefully at that point in time, it'll be self-custody. So I won't have to deal with like my Russian oil stocks where it's like, oh no, Travis, your broker can't buy or sell them right now. Like, why don't I own them on a wallet on my phone? I own Bitcoin like that. Like, why can't I move it to my hard wallet? Why can't I have equity represented on the blockchain? Why do I need an exchange and a regulator? And like, I think that the world is going to move that way. I think that the millennials are going to look at what the boomers did, and I think they're going to go, we don't want anything to do with this. And so, my opinion, that's where we're going. Time will tell. And, if there's one thing that I am personally doing is I am constantly and weekly adding to my metals position, but I am also not getting scared out by every YouTuber out there who's like, you need to sell all of your positions right now, because I have good dividend paying companies. I own Exxon. Like I have like, yeah, I've got like Shell. I've got pipeline refineries that pay like 11% dividend. I've got JP Morgan paying a great dividend. I just bought a Brazilian oil company with a PE ratio of 3, paying a 22% dividend as of this morning. I just bought a couple more shares this morning. Like, I'm super bullish on that, man. Like, stock's probably gonna double, and on top of that, they're gonna pay me 20% a year to own it. Like, come on, man. Like, and when it doubles, I'll sell half my bag, I'll be doing the Doug Casey free ride. I'll take my capital and buy more precious metal. Like, it's not a difficult thing to figure out. But also, coaching link below if you want to jump on the phone with me. I'll do about 30, 45-minute coaching calls. I would love to jump on the phone with you and talk to you about your own unique situation, whether it's homesteading, finances. I mean, I'm just into these things. I've been into these things for a long time. I studied this stuff, and I just decided, like, when I saw how nasty and dirty, like, the industry was, I was like, there's got to be a better way. And yeah, so I found crypto, and then through that, I found precious metals. So... anyway, guys, see you guys down in the comments. Until the next video, please give this thing a like, help out with the algo, and you guys be well. Take care.